YouTube, how are you doing? Yeah, it's your brother UD once again. I am him. I'm back. You know, it's been a while. It's been a long time. You know, and I have not posted for a long time. But don't worry, we are back in full force. We are back to give you that educational content, you know, that we used to give you. I am back to give you all this content, and believe me, this channel only teaches you how to become profitable, how to do your analysis properly, how to use the right strategy and approach the market in the right way. So you don't want to miss this video. Please make sure that you watch this video from the beginning to the end. And if you are new to the channel and if you like this video, please just like, share and subscribe to the video so that you will help us reach more audience, and also, you know, be updated and be notified whenever I post another video like this. So today I have something very new to us. And believe me, I'm going to explain this strategy that I'm using currently to make money in the market. I'm going to reveal it to you 100%. I'm not going to hide anything. I'm going to show you how to analyze the market using the strategy, and how to make sure that you take the right trades. Okay, so, and by the way, this strategy is originated by DAX, you know, so that is the same strategy I'm going to explain to you so that you know how to use it. All right, so let us you know, go into the analysis or the strategy proper, so that you know how to, you know, use the strategy. Now you know that we have the normal we have the basic market structure. So what you will need in this strategy is you have to understand market structure, you have to understand liquidity, you know, break of structure and all that, you know, your trend, you understand your higher time frame trend, how to identify it. Okay, so the basic market structure that we know goes like this: swing high, low, high, low, high, a low, a high, and a low, and a high. So that's for the uptrend. So if you are looking at it in a downtrend, you have something like a low, a high, a low, high, low, high, low. So that is for downtrend. But in this strategy, we don't trade these movements like that. You know, liquidity is the main thing. If you understand liquidity, you will understand how the market moves. But when you don't understand liquidity, that is when you are going to find it difficult to understand how the market moves and where the market is going to move. So here, liquidity is our watchword. Liquidity is what we concentrate on. So you have to really understand liquidity. Now the strategy is very simple. I'm going to show you what you need to see in the market. You don't have to stress yourself. I'm going to show you what you need to see in the market, and once you see that thing, then you are good to go. So let us go to the analysis proper. Now you need just two setups, the A and the B setup, So the A setup goes like this. Assuming price was coming down like this, we're moving down, you know, this is the normal way the market moves. So all of a sudden you now see a change in character, which is a break of structure. So you now see a change in character. Now seeing a change in character, this particular low now becomes your sweep. So now this sweep is that last break of structure that caused a change of character. That last break of structure that caused a change of character, that is the sweep. Okay, so now after that sweep, you now have a break of structure, which is your change of character. That means possibly price wants to change from a downtrend to an uptrend. Price wants to change from a downtrend to an uptrend. So what you now observe is you have a sweep and you have a break. This is for the type A structure. You now have a sweep and you now have a break. So the next thing now that you want to see the market do is to present a liquidity. So market will move back into the range at least close to 50% Fibonacci, or more than 50%, or on the 50% Fibonacci level. Now from there it pushes up again to give a second break of structure. That is what you want to see. It will give a second break of structure. Now after that second break of structure, it will now come back again to clear the liquidity and then enter into your POI and then buys. So that is the structure. That is the structure that you want to see on the type A structure. So now you have a second break here. A second break is here. Note, a second break is there. Now you have a sweep of liquidity here. So until price sweeps liquidity, that is when you want to be in the market. That is when you want to jump into the market. So now once price sweeps liquidity, you will now have your POI somewhere here, and that's where you want to buy. So you see how the type A structure looks like. You know, guys, this is simple. This is just what you need to see in the market, and then you align it with the higher time frame trend and you are good to go. So this is the type A structure. This is the type A structure. This is the type A structure. Okay, for buy, this is buy structure of the type A. So that is what you need. First of all, you need a sweep, you need a break of structure, you need market to come back, keeps liquidity, you need it to go back and break the second structure, and after that it comes back to clear the liquidity and then enters into your POI and then buys from there. You get? That is what you need to see. That is what you clearly need to see. So in the market will present you with this structure. So I'm going to take it bit by bit. So on this video, I'm just going to show you the type A buy and sell structure. The type A buy and sell structure. So we'll go into the chart after this and then show you the structures on the chart. So this is for buy. This is for buy. This is for buy. So the next one is for us to draw this type A structure for a sell. We want to draw it for a sell. So let us go for the sell. Now remember, for the buy, price was initially selling. Now for the sell, that means price must have been buying like this, and you have a sweep of that high and a break of this low, and then price goes back to keep liquidity 50%, more than 50%, or very close to 50% Fibonacci level, and then price comes back to give a second break of structure, and now it goes second break of structure, and now it goes back to clear the liquidity, enter into your POI and sell from there. So that is the sell structure for the type A structure. Now you can see your sweep here, you can see your sweep right here, you can see your break of structure right here. This is your break of structure, and you can see your liquidity right here. This is your liquidity. That's your liquidity. You see, after price kept that liquidity, it gave a second break of structure here. It gave a second break of structure here, you know, breaks, it gave a second break of structure before going inside to going from here to break, to sweep the liquidity and then sell. So after it sweeps liquidity, that is when you want to enter the market from your POI. I will take POI separately after we are done with the structures. So this is type A structure for the sell. This is type A structure for the sell. Now this one here, this is the buy and this is the sell. So what you want to do is just understand these structures. You want to understand these structures. You want to know how to draw these structures. When you know how to draw them, you now go into the chart and look for it. So after this, we will go into the chart and then look for these structures. All right, let us go into the chart. Okay guys, we are now on the chart. This is basically a synthetic, I trade deriv more now. So I'm just going to show you on crash 1000. This is crash 1000. A trade I took some was it yesterday or trade I took yesterday. So I'm just going to show you how this thing works, how it works. Now we are talking about type type 1 type A structure. We are talking about type A structure. Now I got this cell from here to here. I got it from there. Now how did I get that cell? How did I get it? So the thing is simple. The type A structure is what you want to see. Your sweep, your break of structure, liquidity, and a second break of structure. Now price goes back to your point of interest and you sell from there if it is a sell structure. So now this was a sell structure. Remember I told you for a sell structure, I'm going to make sure that this video is not too long, so I'm just going to show us 2 examples. Now for a sell structure, I told you that price must have been moving in an uptrend previously. So if you check this, you see this was an uptrend previously, this was previously an uptrend. Yes, so when after that uptrend, this is what I found out here. I saw a sweep of this high, and I saw a break of this low. Look at that guys, you see a sweep of that high and you see a break of this low. Look at how massive the break is. This is the kind of break I want. Now after that break, you now discover that price goes in here from this point to this point, and if you take your Fibonacci tool, you will see that from here to the break where the market breaks the structure, you will see that it is on the 50% Fibonacci level. Look at that guys. So that is a very valid liquidity. So that was it. And now okay, so we waited for a second break of structure, which we got here. Look at that guys, this thing is simple. A winning strategy is not supposed to be complex. This thing, keep it simple. So this is the second break of structure. Remember type A structure, you have the sweep, the break, the liquidity, the second break of structure, and then price goes back to clear the liquidity, and that's where you enter your trade. So seeing this, it was a very nice opportunity for me to know that okay, on this other block we are supposed to sell from there. And that was where I picked the trade at sniper. You understand? That was where I picked it. So that is, you see how it works. You see how it works? Very simple. You need to make sure that price was originally in an uptrend if you are looking for a sell structure, an uptrend, and then you have a sweep of this high and a break of this low. Simple. A sweep of this high and a break of this low, and then price goes back to keep liquidity right there. So this is your liquidity. This was the liquidity that I saw. This was the liquidity that I saw. So price goes in here to keep this liquidity. You get that? So price goes in to keep that liquidity. You now wait for a second break of structure, which was here, right here. This is the second break of structure, and now price goes back again to clear this liquidity. And you see, guys, once price cleared this liquidity, it sold. That was a beautiful trade for me, and this trade will still continue to sell down to this point. Well, I took my profit out somewhere here. You get? So that is it, guys. That is it for that one. So let us look for the buy structure. Let's look for the buy structure. I got a trade on volatility 151s. That was it. I got a trade some days ago. Now let me show. It was on the 15-minute time frame that I saw it. Look at this, guys. Look at this. Remember, we are talking about buy. We're talking about buy. Now, like I told you, if you are looking for buys, that means price must have been coming down, moving in a downtrend. So if you look at this, we see price was moving down here. You see low, high, low, and all of a sudden we have a break, overall break of this high. You get? So I told you a sweep is the last low or the last high that is being broken. In this case, the last low broken before price change character. So that is it. So you now have your sweep and your break, and after that break, what did price do? Price came in here to keep this liquidity. Okay, so you don't just look at the liquidity, you pick your Fibonacci tool, measure from this low to the break, and you see that the liquidity was up to 50% Fibonacci level. So that's a valid liquidity. So it kept liquidity here, kept liquidity right there. That was where it kept the liquidity. Okay, so you now extend that line there. That was the liquidity line. Now you know what happened? Price, after keeping liquidity, we have a second break. Remember, you have a second break of structure, and this was the second break of structure. This was the second break of structure that we had there before price now comes back to clear that liquidity, and immediately it cleared the liquidity. That was where I jump in. Somewhere around here. As we are jumping somewhere around here, and you see price moved and hit my take profit. Price moved and hit my take profit here. That was it. You see, guys, it's very simple. The thing is very simple. You don't have to complicate the things for yourself. You don't complicate it. Just follow the structure. All you need is the structure. So you're not going to take trade now with the structure. All you need is just go into the chart, try to spot out this structure, the type 1 structure, just as I have shown you now. So I leave that for you to make sure that you go to the chart and practice it yourself. And I'll see you in the next video, which I'm going to explain the type B structure with examples. So guys, for now, like I said, if you love this content, make sure that you subscribe to the channel, like the video, share it with your friends so that they come and learn it with you as well. And make sure that you practice this thing. Make sure that you sit down to practice it. Look for them on the chat. Okay, look for them on the chat, and make sure you watch this video over and over so that you understand really well what I have taught here. Okay guys, so I'll see you on the next video. Until then, remain blessed. Thank you.